Hello, I'm Juliette Sarli. In this week's edition of IG Macro Intelligence, we take a look at ASX listed healthcare stocks. Citi analysts have revealed their top picks in the ANZ healthcare space, taking into account the impact of US tariffs, drivers of revenue, and market sentiment. The analysts' top picks are ResMed, CSL, and Telix Pharmaceuticals, while they remain neutral on Cochlear. ResMed shares have risen around 16% over the past 12 months, but have underperformed over the past month. ASX TradeWatch data showing shares in a long-term uptrend, which suggests the stock can be expected to rally in both the short and longer term. Citi analyst Laura Sutcliffe noting ResMed has largely escaped unscathed from the effect of US tariffs, despite having large exposure due to the fact sleep apnea equipment falls under the Nairobi Protocol. She also points out ResMed has just doubled its manufacturing capacity in the US while continuing to manufacture in Australia and Singapore. The broker has a buy recommendation on the stock with a $51 price target, higher than the average recommendation as surveyed by Refinitiv, suggesting ResMed could rally a further 17% to $48.60. On the subject of the GLP-1 weight loss drugs, analysts at Citi say longer term they could damage ResMed's total addressable market, but in the near term the outlook is more favourable. And ResMed CEO Mick Farrell remaining adamant GLP-1s have not weighed on the company's bottom line, instead of providing further revenue stream.
1.6 million patients that we are following who have a GLP-1 prescription and who also then got a diagnosis and a diagnosis with sleep apnea and a prescription for a positive airway pressure therapy. These are very motivated patients. More than 11% higher likelihood to start CPAP, APAP or bilevel, and more than 3% higher resupply rate at 1 year, more than 5% higher resupply rate at 2 years. So we think it's turned, we always knew it was a tailwind, not a headwind. I think now the world knows that.
Well, CSL shares got punished in the wake of its full year 25 results and have fallen around 25% since, with investors seemingly unnerved by the outlook and announcement of its intent to divest its flu vaccine business. Bell Potter recently downgraded its outlook on the stock to a hold from a buy in the wake of a full year result. However, Citi has a buy recommendation with a $265 target price, suggesting a further rally of around 33%. And Morningstar believes CSL's recent share slump masks long-term upside.
CSL is significantly undervalued, and the main reason is because margins in the plasma division are still set to expand long-term. CSL just rolled out significant improvements that are enabling faster and higher volume donor collections. Blood collections are 10% higher on average per donor. Donations are 30% faster on average. They're targeting a 20% improvement in the amount of blood proteins they can extract from collections. The benefits of these newer collection systems are yet to flow through, given a year lag between plasma collections and sales, but we think this will be apparent.
Board Minute, meanwhile, a little bit more on the fence.
The uncertainty, though, around their demerger is what is concerning us at the moment, because there hasn't been a lot of transparency around what that business is, what is involved in that. The analyst has looked at it and said, well, could be worth anywhere between $5 and $14 billion. We really just don't know at the moment because we haven't got enough information. So I think at the moment what we're looking for is more information from CSL. Certainly their announcement last week with Varmex was a positive one. But yeah, as far as the demerger with Sequirus, it probably needs some more information, but it's definitely one that, around $200, it's looking interesting.
Telix Pharmaceuticals, meanwhile, shares have underperformed over the past year, down about 30%. Now, Citi sees several potential catalysts over the coming months for both its diagnostic and therapeutic franchises. It initiated coverage on the stock with a buy high-risk rating and a $34 target price, suggesting the stock could rally almost 145% from current levels. Now, the average broker recommendation on Telix is also a buy with a median price target of $28.34, suggesting a further 88% upside. Yet, according to technical analysis, there could be a pullback ASX TradeWatch data showing shares in a long-term bearish trend, specifically longer term, with the 200-day moving average falling, suggesting demand for the stock is low. Citi analysts are neutral on Cochlear, along with others such as Fisher & Paykel, Ansell and Ramsay Healthcare. The neutral rating is a downgrade from the broker, which previously had a buy, and Citi has also lowered its target price to $320 from $350. Cochlear shares have risen around 5% over the past 12 months, and technical analysis shows a downtrend is confirmed by multiple indicators. Analysts suggest holding it at current levels. And that is your IG macro intelligence for this week. We'll see you next week.